Good day, everyone, and welcome back to the market review of Nasdaq 100. And because last week I've been a very long time did not do the market review since because I'm busy with my thing. So right now we are back to the market reviews, and this week uh, I would say that the market is quite ugly. As you can see, the market has been consolidating through 6 weeks, as I can see, and I do not know where does the market want to go, as the daily chart have no clear directions, or it is not in a trend. Probably I would just go into the 1 hour or 50-minute time frames, into the intraday time frame, to see where does the market want to go during the starting from the 8:30 New York Times to the 4 p.m. New York time. As for my trading style, I would just trade for AM sessions, and I do not do PM sessions. So let's begin our daily breakdown. Or before that, the day I would want to do market review is Monday market, which is the 8 April 2024. In daily chart, we can see that the buy side liquidity, which is this green line, the buy stop has been taken. So I would expect, I don't know whether the market will want to go lower to take out the sell side, or it will continue to go higher. Well, in this case, there's also a bullish fair value gaps. Well, this in Thursday, the market has closed the bullish fair value gap, means that this bullish fair value gap will become an inverted fair value gap. In the inverted fair value gaps, the market shouldn't go higher or take out another buy side liquidity, the new high, and it will continue to go lower to attack the sell side liquidity. But in Friday, we can see that the market is going higher. It touches the green candle. This is a bearish order block, means that the market will not continue to go higher, it will continue to go low. But in Monday, the market has every week there's a new week opening gap. There's a gap higher new week opening gap. So I do not know that this week what is the market will want to go, as this is a inverted fair value, means that the market shouldn't go higher than this inverted fair value or the bearish or the block. If it continues to go lower to attack the sell side liquidity, because there's a sell side liquidity, and also the volume imbalance. Right now, in this case, we do not know which direction is the daily time frame. I would suggest you to go to the low intraday time frame, which is the 1 hour and 50 minutes, to see the how does the market perform. Now let's go into the 1 hour chart. In 1 hour time frame, as in last week Friday, the market is showing bullish. While in Monday, I would expect the markets to go higher if the market is wanted to swing in the daily the buy side again. As the sell side liquidity, it still remain not taken yet. I I stand as a 50-50. The market may go long or it would go short on that day. That's why I will wait until the time. Before I proceed to the time chart breakdown, I would want you to know about the checklist of the smart money concept. The first thing you need to check is the time, which is you always use the New York opening time. The New York opening time is always, I would say, start from, for instance, it start from, for my starting time, it's 8:30 to 12 o'clock noon is my AM session, while 1:30 to 4 it's the PM sessions. When you trade during the London session or AC session, the market may not give you any volatility. It's better to trade on the right time. So time is very important, so I put it in the first priority. And then the second one is the liquidity, where is the swing high or the swing low. Swing high, swing low, it's considered as a liquidity. So during the 8:30 a.m. your time, I will find the which liquidity it's the market will want to attack on, and also the 9:30 equity market open. This is the two of the time I would be focused on, and my single bullet time is 10 to 9:50 to 11. I will find the setup during the time, and also if the market may show you the setup at it's between 9:50 to 12, so you need to know what is your criteria when you want to find a setup. So my first, there's four things you need to know. It's one, the first one is time, the second one is liquidity, and the third is market structure shift, and also the order block. The second, the third, which is the liquidity and market structure shift, is very important to determine where is the market I want to go. Liquidity means that the market has swept one of the swing high or swing low, or you can call it swing high buy side liquidity or swing low sell side liquidity. The second thing is you need to check is the market structure shift. Market structure shift is what I taught in the previous video, and you just watch back the video. And when you see a market structure shift, there's two. One is bullish market structure shift. If you see bullish market structure shift, means that the market will want to go higher to attack the buy side liquidity, whereas if you see bearish market structure shift, means the market want to go lower to attack the sell side liquidity. That's the third. It's the fair value gap. Fair value gap is the place you want to end, where the entry you want to be, and the order block means to confirm the market will not go beyond the candle. Whether it is bullish order block or bearish order block, you need to see. This is one of the confluence, and fair value gap it's either buy side imbalance or sell side imbalance. Okay, let's back to the chart. In 1 hour chart, there is also buy side liquidity, the green color here, wasn't sweep, and also there's a lot of equal low, the sell side liquidity, where the market will want to attack on. We do not know what the market is showing in 1 hour. Now I will go into the 15 minutes. In 15-minute time frame, as the 8:30 the market did not sweep any buy side liquidity. This is also the buy side liquidity, the swing high buy side liquidity, and the sell side liquidity here. I will start to see the liquidity. The first thing I will focus on during the 8:30 or the 9:30. As you can see in 9:30, the market has swept the sell side liquidity. As I said, I find my setup during the 9:50 to 12 o'clock. I will find the nearest one, which is the 9:30. If 8:30 does not show any liquidity sweep, I will see 9:30. And you can see that in 9:30 the market has swept the sell side liquidity. It means that the market would want to go higher to attack the buy side liquidity after the sell side liquidity it's taken. While you see liquidity is taken, you have to check the second thing. The second thing is market structure shift. If you don't see the market structure shift in higher time frame, you could change to a lower time frame, such as 5 minutes, 3 minutes, 1 minute, to find the market structure shift, to have to find your entry during the AM session time. While in Monday, the market seems to be more to accumulations. It's either accumulation or manipulations. So mostly the market would do accumulation this week, Monday. So I would want to see the next day what would the... Okay, now there's three. You have to know the power tree: accumulations, manipulation, distribution. So if you see that the Monday it's manipulation, probably the next day or next 2 days is the manipulation. After that, it's the distribution. If the market starts from manipulation, after the day, maybe Tuesday, Wednesday, Thursday, it will be the distribution, and Friday will be the closing of the weekly candle. So now going back to the chart, you have seen that the sell side liquidity is swing during 9:30. Now I would change to 5 minutes to find whether there's a bullish market structure shift to go higher to the buy side. In 5 minute time frame, I do not see any bullish market structure shift after the sales liquidity it's sweep. So now I will change to 3 minutes or 1 minute. In 3 minutes time frame, it's same with the 5 minute time frame. I couldn't see any bullish market structure shift. So I would just go into 1 minute to the smallest time frame to find the bullish market structure shift. Let's go into the 1 minute. In 1 minute charts, I can see that there is a bullish market structure shift. Now I will show you where is the market structure shift. You see a light bulb I put on, and this is the swing high. The candle lower to left, and the candle to the right and the middle. This is a wick. The highest wick is a swing high. Means that if in your checklist, the first is the liquidity. Now the sell side liquidity is sweep. So after that, you see a bullish market structure shift. The market has show a displacement higher, and it sweep this displacement higher of this swing high. Means this is a bullish market structure shift. The market will want to go higher. While this is a market structure shift of a breaker, means that the market will not come down to this fair value. Instead, you can put your stop loss here, this candle low. The market will just stay in this fair value gaps. It will not go lower to this fair value gap, because this is a breaker, bullish market structure shift of the breaker. If you still do not know that what is the breaker and the market structure shift breaker and the normal market structure shift, you could watch back the video that I taught before. Now we focus in today. Now the two of the criteria has fulfilled. First is liquidity. The second one is the market structure shift with a strong displacement, and the third is the fair value gaps. You can see this is the fair value gap, so we would enter in this fair value gaps. The fourth is the order block. Whether it's order block, if it's bullish, you should find for the bullish order block. The bullish order block is red color candle, while the bearish order block is a green candle. So now, as you enter here, it's 9:51. If you miss the setup, you could enter right here, and this is a bullish order block, the red candle. Your stop loss would put in the swing low below here. Here, you will put your swing low, and your target would be the nearest buy side liquidity, which is the high of this buy side liquidity, high of the 856. Your first target, because we do not know the market is going bullish or bearish, so you couldn't predict how far the market would want to go. The target you would aim is the swing high, the nearest buy side liquidity and swing high. I think it's enough because you have gained a 5.34% profit of your capital. It's enough. Before I end this market review, I want you to always check on this criteria. The first is the time. The second is the liquidity. The liquidity you have to find or to determine in a higher time frame, which is the 1 hour 50 minutes. The 5 minute, 3 minute, 1 minute, it's for you to find the setup, whether it's a market structure shift or fair value gaps or even an order block. Now the second criteria is the market structure shift, bullish market structure shift or bearish market structure shift. The market structure shift has a pattern which you have to see a very strong displacement and create a fair value gaps. If the market is doing market structure shift but with a very weak of a displacement, you would be doubting whether the market is going to the direction. That's your criteria you need to fulfill before you taking any trade. The third you need to know is the fair value gap. After the displacement, which the market, I would want to clarify more about the market structure shift. The market structure shift you have to see that the displacement has go higher of the swing high, or the if it's bullish market structure, the displacement have to go higher of the swing high. The swing high means the candle to the left is lower and to the right is even lower. So it cannot be at the same high, which is an equal high. If it breaks the equal high, it doesn't mean it's a market structure shift. The swing high, it's the long wick in the middle. This is, you can go to your chart and determine the liquidity. What is called swing high and swing low. After you fulfill these 4 criteria, okay, do not forget the first one, the time. If you trade in the wrong time, it will cause you losing. So time is very important. Now after you fulfill all the criteria, only you take the trade. So today is the market review of the Monday, 8 April 2024. I wish you good luck in your trading, in your journey. Do not give up. If you taking any loss, I hope you learn the mistake. I also learning my mistake and I'm improving my mistake. When you taking lots of losing, maybe that's something you didn't follow of the criteria, the rules of the smart money concept. So I will see you next time. Take care.